Welcome back. The market's moving from strength to strength, and we are keeping in with the technology theme. Time to talk markets. We have Ashi Anand of Valcreate Investment Managers with us. Ashi, great to have you in the studios once again. Now, we were just discussing this. Last time you spoke to us about your digital focus strategy, and you have a very concentrated portfolio that you are running there. We were speaking to one such company just a while back. We were talking to NetWeb, and they've got a tie-up going with NVIDIA. Market is so excited. They're building servers. So my question is this. Investors are looking for technology ideas beyond traditional IT services, right? The thing is how to find the right stocks, how to go beyond the noise and the buzz to look at businesses which really have the spark to scale to something big. What are your thoughts here?
So which is actually what gets us so interested about the digital theme, right? If you see traditional IT services, they were obviously in the 2000s to 2010, they were growing at kind of the 20-30%. But you're now getting kind of 10-12%. If you're getting 10-12% growth, you're happy. In the digital space, you have the potential for explosive growth, right? And this is a whole new segment of the market. These companies really invest significantly upfront, in the case of NetWeb, to build out a particular type of a platform. But what we find very interesting are consumer-facing platforms, people like Zomato, Paytm, Nykaa, etc., where you create a network. Now, what happens is with a network business, the potential for kind of growth is actually quite exponential. And if you really understand some of the underlying themes of what's happening in India, there are multiple factors that are coming together to help drive digital adoption. Now, this includes the rise of UPI, it includes the explosion in terms of internet penetration driven by cheap data, smartphones. As consumers get onto the internet, right, there is a certain progression that they have in terms of their adoption. Now, as that adoption rises, it really leads to a tremendous scope for growth. For all of these digital platforms, you'd also obviously need servers, you need other types of software as a service companies. This entire space has an ability to continue to outperform in terms of growth at very rapid levels, according to us, for the coming decade.
So I'm sorry to comment on this in the interest of time, but so no one's doubting or debating the potential for growth. It's absolutely there. That explains the excitement. The moment you hear the word semiconductor somewhere or NVIDIA somewhere, stocks completely shoot through the roof. Tell us about why you're more convinced on consumer technology, perhaps not so much SaaS. How are you selecting the digital companies that you own in the portfolio?
So our strategy is kind of defined like a quasi-private equity strategy. What we are very clear on is we're trying to identify who we believe are going to be the winners 5 to 10 years down the road. Right? Those competitive barriers to entry are something which are exceedingly important. And that's probably, if you look at the one factor that we focus on most, is has someone built a network where you've achieved that dominance where it's very difficult for new entrants to come in. Now, that is what accordingly we look at networks. The moment you have 1, 2, 3-sided participants all coming together, replicating that is very challenging. However, the moment it comes to SaaS, when it's just a technology, you have the potential to come out with another technology. According to us, the competitive barriers to entry, while they are still fairly strong, are not as strong as those of network businesses. So we are evaluating a lot of these SaaS companies. We are evaluating some of the technology companies. But we are very clear that in our digital disruption strategy, these need to be digitally native businesses. We're looking for that potential for explosion of growth. You're not looking at companies that can be 2 or 4 times the size 10 years from now. You're looking at companies that can be 7, 10 times the size. You've seen this in the US over the last decade. We believe this is going to be the decade for Indian digital platforms.
So now just to pick on 2 SaaS companies that we all know, one is RateGain, the other one is Mamaearth.
Sure.
You don't think they have a moat around their business?
So there are moats, right? They definitely do have moats. Mamaearth, for example, you have issues around availability of the map. Google can't get access to the same kind of maps that Mamaearth does. Now, the only problem is, what if there's another player who comes in, another Indian kind of player? Is it possible to disrupt? So we're not saying that they don't have a very strong presence, right? But the potential to disrupt, according to us, is slightly easier than the potential to disrupt a Paytm or Zomato.
Got it.
That's one point. The second point is that what we're really looking at are very large target addressable markets. We're trying to understand companies.
So you want a huge TAM,
right? Yeah. So now what's happening is a Mamaearth, a RateGain, they already have fairly decent market shares, but these aren't very large companies yet. So we're really trying to identify the Asian Paints and the HULs and the Kotaks of tomorrow. right?
Of the digital world.
Of the digital world.
Today, you're, since we're still on the subject of the digital fund, you have 8 companies, right, in your holding?
Yes.
It includes a Zomato, a PB Fintech, a Paytm, a Nykaa, India Mart, Info Edge, Delivery. Have I missed out any?
No, I think you've pretty much covered.
Okay, so these are all these are the companies that you have. So you're not fully convinced about investing in SaaS companies, though you are evaluating it. Tell us what else you're evaluating in this fund.
So the other thing, what we are most naturally comfortable with are digital platforms, right? We really like the concept
some companies, right?
So the Zomato, the PB...
These are there in your fund.
These are the platforms, right? Now, the other companies we are evaluating are a lot of these SaaS players. We relatively prefer the platforms to the SaaS players. We're looking at D2C brands, right? Mamaearth has obviously gotten listed. It's done extremely well. They've had tremendous margin expansion in the recent kind of quarter. So that is, again, something that we are closely evaluating. There's a very interesting
that's consumer, more consumer than digital.
That is more consumer. The only thing is because the brand was built digital first, right? As in, it is largely over 50% of their revenues are online.
Yeah.
Their own website is extremely kind of important, a very important part of the kind of overall story, right? Which is where it kind of fits in. But again, according to us, that same risk, right? As in, we're still evaluating that. As in, we aren't yet convinced as much on the competitive barriers.
So that's the only stock?
No. So there's also obviously a fairly large pipeline.
We're going to continue this conversation another time. For now, we're completely out of time. Thank you for joining in. We'll slip into a very short break. We'll come back with more on the market. Stay tuned.